presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to our man George in Newport Richie. George, what's going on, brother?
Hello, Tom. Good afternoon. How are you?
I'm doing great. Yourself?
Yeah, great. I've been following you for the last 2 years, listening to your show.
Well, thank you very much. I appreciate it, George.
All the hard work you've done for us over the years.
Well, I really appreciate you calling and saying hi.
My pleasure, Tom.
Okay.
I'll listen to your show.
Thank you, man. Have a great one, a safe one. Appreciate it, man.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Tuesday afternoon, 3 p.m. Eastern Time, final hour of the trading day, and we got markets continuing the trend of positive prices. Quite a relentless market across the board. Indices dramatically higher. How about the Russell? Pushing 1.7% in the green right now, up 34 points, leading the way at 2107. S&Ps right now up about 0.6%. Up 34 points at 59.81. You get the NASDAQ 100 up 0.8%, trading at 21,702, and the Dow up about 0.5%, 42,590. As we talked about in the top of the hour update there, you get the dollar catching a little bit of a bid, 99.22 right now, off of the lows of about 98.58 last night. And with dollar strength, we got a little bit of gold weakness, but all things considered, holding up well at 33.79. And yeah, how about silver? Very little weakness in silver at all, right? You accelerate higher from 33 to 35 yesterday and not really giving it back at all, bumping up against this area from April in that silver contract. We jump around to some of the equities, and we got to treat this hour, folks. We got our man Basil Chapman. He's coming up after the first break, 3:15, and then Tim Ord coming up at the bottom of the hour, 3:30. So a couple great segments and guests, and we'll go through the market on this first one. And how about NVIDIA, man? It's not stopping. You're up by almost 3% on NVIDIA. Remarkable. We jump around to the other, no matter where you are, right? AMD, you're up by 1.8% right now. But back to NVIDIA. I was reading this one earlier. And how about it? $1 trillion. And I think it's even more than that. You're at about a 1.25 is the number. But you're talking about $1 trillion rally, okay? And the animal spirits are back alive again, folks. NVIDIA's market cap, $3.4 trillion now. All right? And you compare that. I mean, you're talking about a number. We were just at barely 2, and I say barely 2. Yeah, $3.45 trillion. You got about 25 billion shares outstanding for this equity. You're talking about a run from 86 to 141. That's $54 per share. Times 24.3 billion. Excuse me. Yeah, you're talking about a number. $1.3 trillion in market cap. Remarkable, man. And it just doesn't stop. And I think about that today, especially if we have $1 trillion in NVIDIA alone, and it doesn't matter where you go, whether you're talking about Microsoft, etc. Excuse me. So NVIDIA is owned by 74% of long-only funds. Amazon, Apple, and Microsoft are the only companies ahead of it, which is the most owned at 91. Yeah, and I've been talking about Microsoft, man. Microsoft is looking like the strongest equity in this market right now. Not keeping up today with NVIDIA, but you talk about where we are. We're within $5. You're within 1% of all-time highs on Microsoft right now at 468. Taking a look at the volume. Microsoft last week, about 86 million shares. That's on a shortened trading week, too. That was decent volume. And we already got about 26 million. Back it up to a daily on Microsoft. Yeah, some strong numbers on Friday. That was the end of the month, so you really got some big numbers on Friday's volume. May 30th, end of the month, end of the week. We do 34.7 million shares on Microsoft, the most since the beginning of May. We'll see how today comes in. Because right now we're a little light. See how it comes in. But volume a little light on a day like today from Microsoft. You jump over to NVIDIA. Let's take a look at the volume of NVIDIA. Yeah, some decent numbers on NVIDIA. We've already done 175 million shares on a day like today, up by 3 million. They're going to do some decent shares on NVIDIA right now. All right, we jump around and talking about Microsoft. How about Meta? So Meta, they ink a deal with Constellation Energy. Talked about on my program today. Constellation, ooh, how about that? I was watching it, but I didn't watch it that closely. Ooh-wee. Talk about a story of buyer beware, man. Imagine that. Can you imagine being an executive in one of these offices, right? You come in, you go, man, this is going to be a great day in the market. Can't wait to tell the market that we just signed a 20-year deal with Meta for a nuclear power plant, and the market says you're worth less today than you were yesterday. Whew. Talk about what's baked into this equity right now, okay? Interesting. Kamiko holds on to the gains, up by 2.7%. So something going on there, man. You know, you take a look at this thing on a longer-term basis. That's a weekly. Let's put it even back. Yeah, we'll have some volume this week, but that could be a volume off the top, depending how we go. We had highs out there at the beginning of the year, 352. And, I mean, you hit 363 in the pre-market. You didn't do it when we opened, but look where we opened, 352. And what did I just say the high was? 352, right? Exactly where we opened. They actually have a technical print. Open of 342. Jeez, look at that. So you're going to see an open, right, on Constellation Energy of 342. But this thing gave up $10 within the last 5 minutes before it opened. So realistically, a few minutes before the opening bell, this was trading literally to the tick of the high from January 23rd. And then they sold the thing down by 15% on the open. Be careful of that equity. That's a warning sign, folks. You know, you get a strong deal like that. Meta is doing a 20-year deal with them for a nuclear reactor that they were probably going to have to wind down. And nonetheless, you give it up, you touch that top. And then especially if you're looking for uranium, Kamiko's a good play. Now, I said it this morning, though. Technically, yeah, you're bumping up against an upper boundary area as well. An area of technical resistance, that area, 62.55. Last week, we hit 62.27, right? Within about a quarter, 25 cents from that level. But, you know, you're looking at those two equities. Kamiko's holding the gains. Constellation gives it up. And you're up 2.6%. And that thing is on quite around 59.71 right now. Tesla trading up 1.9% right now. Jump over to Google. So Google, I was talking about this morning. You see the volatility on Google. There's a Barclays analyst last night talking about that if they have to divest Chrome, which is still an outlier risk, but it's more of an outlier risk than it was when the penalty phase, the remedy phase, I think they call it, of their Justice Department trial. That, yeah, you're talking about a potential 25% pullback potentially if that were to happen. It's a tails risk, but boy, 25%. Watch out. All right, folks, stay tuned. I see our man Basil Chapman. He's in the Tiger's Den. He's getting ready to come on. Stay tuned. We'll come back with Basil, folks.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. S&P's up by 33 points right now. We got the S&P's making a run for 6,000 yet again. We're trading at 59.81 right now. And, folks, right now we're going to jump on over to our man Basil Chapman, as we do each and every Tuesday at 3:15. Right on the front page of TFNN, folks. Right there, the opening call by Basil Chapman. You can sign up. Click that button, subscribe. You can sign up for a month subscription, 6-month, or a year. You can save up to 22% on the 6-month or 33% on the yearly. Best part about it is all of those come with a 30-day money-back guarantee, folks, and you gain access to a number of outstanding webinars along with Basil's outstanding service. He's got updates every morning. He puts out weekend updates as well for subscribers. Great service. Basil Chapman, good afternoon.
Hi, Tommy. How are you?
I'm doing fantastic. How you doing, man?
I'm doing well, thank you.
So, we got quite a market, Basil. What are you seeing out here, man?
Well, it is quite a market because a couple of things happened today that I didn't expect to happen this soon, but I'll explain what we're looking at right now. So the Dow is trading up 227. We've been long the Dow since April, and it's doing very nicely. It's actually lagging some of the other indicators, but other indices, but it's still doing very well. But there's a pattern that I look at that has a trend line. I'll just make this brief because I'll do much more in my show, The Tiger Technician's Hour, tomorrow. So, because there's quite a lot to cover here. But there's a cup formation and a declining cone formation, expanding cone. When the price takes out the trend line, that the upper trend line, it says you can go to the next peak on the left. Well, we've already done that. And that just says that the 42,842 level will be the next resistance, and we're at 42,532, and the 9-period moving average is still very positive. Over the weekend, going into Friday, we had taken we've got really nice long positions, and I said I don't want to mess with anything on the long side because until the market has news that it perceives as bad and sells off sharply and does that day after day, the market buyers will come in. But I do think there's a chance that we could start a little bit of a rollover over the weekend, and we kind of did that. We had a very sharp down opening on Monday, but then the market turned around. So I had very tight stop on the S&P, the short position we had, and I didn't want to change anything on the long side. And one of the reasons is you can see that in the weekly chart, certainly of the Dow, that pink 9-period moving average is really close. If it makes this leg C going above the 42,842 level, and then coming into either this week or next week, that's going to be very positive, and that's going to help that particular index. So overall, I've used certain stocks as indicators and I've used GE, which we've been long since the 198 level back in early May. Early May. What we're looking at is it's at 248, and in the Chapman wave, I always look at a pattern that I call the instant restart. And if within 3 bars, if after this fourth peak D, there's another high, you can go to a brand new buy mode, and that's exact to another peak D. Well, yeah, we are in leg D. So this has been a fantastic leader, and this is the cyclical area in the market. This is the deep cyclicals. GE Aerospace. I mean, you don't get more cyclical than that, and that's doing very well. So we've kept that position, taken a little bit off, and today, in fact, we took a 25% gain, just a tad off. I call it a smidge, just kind of to reward yourself for the work that you've done. And one of the aspects that I think is very important is the QQQ, and this is a surprise to me that it happened today. It broke to a new recovery high. But in the Chapman wave methodology, you can go to A, B, C, D, E, F, G. Those are the peaks. Each higher one gets alphabetized sequentially. But there's never an H. So G is the highest. Well, if yesterday was a G, we broke that today. That has to be a brand new A. I mean, it's hard to believe, but this says that
if that's what they say, Basil, right? If that's what the charts say, go for it.
You have to follow it, right?
Totally.
So that says that there should be higher highs to come. It doesn't. There are other techniques that tell you how high, but it says that within the context of higher peaks, we're in leg B. We still have to have a lower high to make a peak B. So that says we should still go to at least 4 higher peaks. And the technicals, look how the 9-period moving average is very strong. And we've taken out that left side resistance I've been talking about for a little while. That was right here, this lower one. The next level will be 540.81 as an all-time high. And we're trading right now at 527. It's a little bit of a way to go, but this is what the charts is suggesting. And look at that trend line that we broke in the weekly chart. So this is positive. I didn't anticipate it would happen this soon. But 1 penny above the previous peak says that you've got to consider this now brand new leg B. Then what I've been talking about is, I shouldn't be telling you because you are now the gold specialist, but we've been long gold, the physical gold, PHYS, which has done very nicely. But you can see that gold has just hit this inside track repellent zone. So it needs to go decisively above. It's done really well. We've been long for some time, but this needs to go quite a bit higher to be able to check to test the left side peak of the 7th of May, and that would be at 34,776 on the continuous contract. But the silver chart has done very well, and we've been long core mining, which used to be called Cordeline.
Sure.
Done very, very nicely. Today we took a little bit of a profit. We only got into it just recently, so we took a 14%, just a little bit off. But look at this, how strong it is. The target, I'll use the same technique I showed a little earlier, where you've got what I call the cup formation with the left side, right side price time match. So this high of the week of, in July of 2021, the high was 9.23. So that's been our target in the very short term. Today it's trading at 886 right now. CDE is the symbol, but it says you've got until July to get to that particular level. If you use this pattern that I call the plumb line, where you use the number of bars on the left going down to equal almost the number of bars on the right. But if you can't get it to the exact low, there are other techniques, and that technique says by July we should be trying to get there. I think it'll actually do it in June, so that's very nice. And then one of the stocks that I've spoken about for some time is that GE. We've been long, as I say, as an indicator, but I've also used. We had bought Robin Hood back in the 16s. We've taken profits from that. We still have a core position. And it's trading here at 72.36. It's up 4.39 today. I used the same technique that I just showed you, this left side, right side price time match, and it took it out exactly the 56.91 level, 66.91 level that we were looking at from April of this year. Made this beautiful cup formation, and now it's testing it. This is the daily chart. It's gone to leg D. The all-time high, and that's been my target for 2025, is 85. That was a round number high, right at the high in August of 2021. So I consider this to be very important because for me, GE and Robinhood are kind of telling me about the market. The one's telling us about the GE is probably also the deep cyclical, and this is telling me that in Robinhood, the more speculative area as a broker, but also dealing with Bitcoin, and I should mention that we are long Bitcoin, been long Bitcoin for some time through the IBIT. It hit a kind of a double top, and that's starting to pull back. So overall, we haven't got that bad news, and that means that buying keeps coming in, and that flip to the positive side, breaking to a new recovery high in the Qs, I think is quite important.
Those are some awesome trades, Basil, from GE to Robinhood, man. And yeah, Robinhood up by 6.6% today. They bought some company in Bitcoin for $200 million. Meanwhile, they're adding billions. Basil, thank you so much, man. We look forward to the Tiger Technicians Hour tomorrow at 10 o'clock.
Thank you very much, Tommy.
Thank you. Stay tuned, folks. Come right back.
Focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. S&P's up by 33 points right now. Markets green across the board. And we're going to jump to Tim. 1 second, though, for Robinhood. I wanted to take a look because Basil, this is an amazing chart we have going on, but it's pretty remarkable when you look at, right? So the news driving Robinhood today is that they bought Bitstamp for $200 million. Yeah, trading higher amid a $200 million acquisition of Bitstamp. Okay. Now, this company has 882 million shares outstanding, right? So theoretically, every dollar that the price goes up, their market cap is increasing by $882 million. So to make back the $200 million they just spent, they really only need their share price to go up 25 cents. And I'm throwing around everything. That's not exactly how it works, right? But the point being, their share price is up $4.50 today, okay, which is going to drive this equity 9, 18. That's going to be 36. Yeah. They're up about $4 billion in market cap today because they made a $200 million acquisition. You got to love that type of volatility, man, to the upside. All right, folks, let's jump over to our man, Tim Ord. We talk to Tim every Tuesday and Thursday at the bottom of the hour. You can reach Tim at ord-oracle.com. Tim Ord, good afternoon.
Good afternoon. So, let's jump into the market, see what they're doing here.
Well, let's do it. We got a lot of green on the board. Let's do it, man. Yeah.
This is kind of a short-term view. This is a daily chart, the SPY, and outlined in blue here, there, and there, and there. Only thing I'm trying to point out is these a trend reading above 1.2 and a tick reading around minus 200 shows panic in the market. Panic usually comes near lows. It can be off a day or so, but price-wise, it's pretty close to the lows. Okay. And if you notice right here, we had one right there and another one right there. Market didn't really rally off of this one, but the one we had what's today? Tuesday last week. We're finally getting some energy to the upside here. So I just want to point out we do got enough panic in this region to bust out of this sideways trading range that's going on between 580, 590 on the SPY. So how high is high? Not a whole lot higher. We think what's going on here is a head and shoulders bottom. The right shoulder formed here between December and February, or that's the left shoulder rather, between December and February, part of March, went down to an April low down here. Market went all the way back up, got above these lows, formed back here in this region right here. So you busted above those previous lows. That implies that a minimum should get back up to the previous highs, which is up around this 610 area. And I think that's probably where we're going to go. So I'm thinking what's forming right now from here probably until August, I think is kind of the time frame, maybe part of September. But this is probably the forming of the right shoulder. So we're going to probably form a trading range in this vicinity. Okay. Right here. So up, probably back down. The only reason why I think that it's going to take that long because the right shoulder and left shoulder, time-wise, a lot of times similar. So you don't have a week-long right shoulder and a 4-month-old left shoulder. So in general, they're pretty equal in time. So that comes around the August type kind of time frame. Okay. So I think 610 next time up, you're going to hit this high, you're going to find resistance, probably fall back down, find support pretty much where we are. We're actually around 570. Then from there, kind of rally up. Actually, this shows a little bit better what I'm looking at. This is a monthly chart. And the reason why I'm thinking this is pretty much of a head and shoulders bottom is because of the volume chart here. This is RR. Actually, Joe DiNapoli figured this out. This is his books. I don't know when he wrote it, probably 80s or 90s, but he called it the railroad pattern. And what it is if you get a big down volume here going down, I don't know, the volume looks like about 1.5 billion shares on that March decline. Yep. Then you had an April decline, but then right after it, you had a May advance that pretty much equaled in volume. And if you notice the charts or the the monthly candlestick patterns are almost identical. One's a little bit smaller than the other. But anyhow, you got the volume pretty much equal, and you got the pattern of the candlestick, just the opposite direction. Here you went straight down, here you went straight back up. They call those the railroad tracks, and those only happens at reversals. So the market is not going to go back down and test the April low. That's going to be just a downside finger, and it's not going to be tested, at least not anytime in the near future. But anyhow, so that kind of confirms the bottom. No test. You're going to take a shot at the neckline here up around 610. I'm thinking to get through that neckline, you're going to have a lot of volume to do it. You have to have a sign of strength through that neckline. I don't think that's going to happen in the summer. June, July, a lot of times are kind of a lackluster months. The ball really starts rolling in August or September, volume is concerned. So I'm thinking this first time up, you're going to find resistance, and that's ideal because, you went sideways here for 3 months. Most likely you're going to go sideways for 3 months. I did a kind of a cycle theory there. If you can see that half moon lines here. Sure. You go up and you come back down. Yep. So anyhow, you start in December, you go to the April low. Okay, that's half of the head and shoulders. To get the other half of the shoulders, that comes in August. So that's how I came up with August, probably an ideal date for the low. So I think you bounce off that high 610, probably waver back down to some sort of an August low. Then that's when the energy pretty much begins in the market again, around that August time frame, sometime in September. But I think we bust through that neckline sometime in August, September time frame, and you rally all the way into year end. This head and shoulders pattern, if you do the measurement, in other words, you take the bottom of the head and you go up to the neckline, you measure that, and you add that onto the neckline, you come up around 740, which is about 25% higher than where we are. So a little bit of mushy going into, I don't know, the next few weeks probably, but ultimately we break out above that 610, head probably is 740. We'll reach 740 year end, maybe, if not January, probably, if not February. So it looks good.
Not bad. Yeah, you're talking about more than 20% from where we are right now at 600, right? And, I like that the fact, it would make sense, and this is in my own head, Tim, but, I was just looking at the charts, a little consolidation wouldn't be that bad when you just traded from, 350 in the SPY in 2022 to 610 in the period of just over 2 years. So it's up 75% from that low. And that was an exacerbated low, but you chop around for a little bit, maybe before that next leg. I know you got some more charts. Can you hang with us? We'll finish it up after the break.
That sounds good.
We'll be right back. We'll be right back, folks.
Setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. We got green across the board. We're talking to our man, Tim Ward. Remember, you can reach Tim at his website or at -oracle.com. And yeah, let's keep going, Tim. So I know we've talked the S&Ps, and are we going into gold now?
Yep. Actually, I wanted to say, Joe Nanopoli was your dad's classmate back in Boston.
I remember. I know that now. I don't know him as well as you guys, but I was at plenty of conferences where I spent some good time with Joe and my dad, of course, and my dad had some great stories. I know, right? But go ahead. Yes, for sure.
So I just want to put that in there. So anyhow, let's get to the gold market. Now I'm a big bull on gold, especially gold stocks.
Okay.
And so, but right now, I think there's still a timeout. I sold out of my position in mid-April. I don't remember, but a little bit right around the 50 range. But anyhow, this is a chart. The bottom window is the GX agility ratio. Next window higher is the GDX advanced decline cumulative, and next one higher is GDX up-down volume cumulative, and top window is there it is, GDX. But anyhow, I just did a Bollinger Band on it. It's kind of a simple indicator, but if you get 3 of the 4 that pop up to the upper Bollinger Band, normally you get consolidations, and all those blue dotted lines are consolidation phases when 3 of the 4, if not all 4 of those indicators pop above the Bollinger Band. Well, so so this is, but they're not long-term sell signals. Most of them last a month and a half. So, but I think this is just a double top. We'll look a little bit further here. Go to chart number whatever this chart is. But anyhow, this kind of confirms the what kind of going on. The bottom window is the 18-day average up-down volume. The next window higher is the 18-day average of the advanced decline, and that it is. But it shows divergence real well. If you notice the divergence there, and actually the market went higher. And previous times it did that. You get a consolidation that lasted, most times a month or two. So you got two different indicator types. Anyhow, they're saying you're just going to need a rest here, especially if the market moves so fast. That's usually kind of burns the candle to a low end, I guess you might say. So I'm looking for a pullback. So where are we going? I've been saying this for about a month, or actually since mid-April. This is probably 3 drives to the top pattern, and a lot of times the 3 drives to the top pattern does make a double top. So we got a top a little bit higher than we had in April. But anyhow, my opinion is still double top. And I still think this big day we had yesterday was probably a buying climax. And we're still going to get a pullback down to 39. So this is still just a timeout and an uptrend. It meets all the requirements. Sometimes you get double top and 3 drives to top pattern. It's not an end of the world. The bigger trends are up, but I think this is just still a pullback. So I'm still long a lot of these gold stocks, but I'm longer the smaller ones right now. The big ones, I'm kind of just waiting for the pullback. If we do get to 39, maybe we get something higher. I don't know. But I think the upside's still limited here. But the idea is keep your eye on the bigger trend. I keep showing this chart. This chart really hasn't changed much. This is still on a buy signal. It got a buy signal back. It looks like about January, February of 2024. The bottom window is the cumulative advanced decline. It's cumulative up-down volume with the Bollinger Band on it. Next one up higher is the cumulative advanced decline with the Bollinger Band on it. This is on a monthly time frame. And the top window is GDX on the monthly time frame. We're running into the highs of 2012 there. We're a little bit past it, but I don't think it's probably going to hold. Probably come back to this area right here, which is around the 40 area, which is kind of back to this chart. Get back here, which is back down to 39. So that 39.40 area has massive support. So that's the time to get back in the blue chip gold stocks. But this chart's not even near a sell signal. I mean, as long as these two indicators on the bottom hold above the mid Bollinger Band, the trend's up. Nice. This is so yeah, you're looking for a consolidation. Consolidations are good. They build cause in the market for the next rally. So this impulse wave we had the upside is probably going to come into a halt here, and we're going to probably flip sideways to down for a month, maybe two. I don't know. So July, August. It's not July. Yeah. July, August, maybe September. I don't know. I don't think we're out that far, but maybe both markets, the equity market and the gold market, may consolidate together into August timeframe. So we'll have to wait and see. But not a big bear. Trends up. Still early in a buy signal. I got some indicators on a cycle basis says we can possibly push out to 2027. There's some other indicators that this 2024 low could be a 12-year low. But we'll cross that bridge when we need to. Right now,
no, I like it, and I appreciate the analysis as always, man. And even myself, I'm in a similar ballpark, Tim. And that's whether you're talking about the price and volume, of course, but boy, the heck of a run it's had. Like you're talking about, a little consolidation. You almost doubled in price in the price of gold itself over a period of like 2 years. Talking about what 1,800 gold was at in October of 23. And here we are in June of 25, and you hit 3,500, almost a 100% acceleration. So, yeah, a little bit of a breather on a short-term basis. I would agree. Hey, I had a question in the YouTube Tigers Den over here, and they were talking about they were ready for you to bring up that chart with the 3-drive to the top pattern. And they were just wondering in general how, and you kind of covered it, looking for potentially the pullback to 39 there. But when you get a move that we got where you almost peak over that third peak, right? And how is that something that changes that at all on a broader perspective? They were just talking about that when they were getting ready. They love that pattern and saying, man, now it's almost a 4-drive. How do you look at that when something that it's, again, peaking even again above those drives?
Well, actually, 3 drives top pattern is common for the 3 drives to top pattern to have a double top. I actually even mentioned that in my market letter. I'm thinking, it didn't look like it was going to do it. Then all of a sudden, this does it.
There we go.
But perfect. You got to look at these other indicators too. They're also kind of saying the same thing here. This is a double top on this indicator here. Then this one here, you're making higher highs. These two indicators should be making higher highs with it. So there's something topping, but 3 drives top. A lot of times you just have a single top, but sometimes they're double tops. Doesn't change the pattern. I still think 39 is a possibility, but I get indicators that if something higher or lower than that, I don't think we're actually going to break much below 40 area, because there's a massive support line on one of my indicators here. I forgot which one it was. I think, I don't know what that is.
That's right. That's a great answer. That's exactly what he was looking for, though. So, that you get another drive right to the exact spot. We're just barely right there, and then, maybe a little bit of a pullback.
Right.
Well, Tim, I appreciate the couple segments as always, man. Great information covering the markets, covering the gold market, and we look forward to talking to you on Thursday.
All right. Talk to you then. Thanks for having me on.
Talk to you then. Folks, check them out, ord-oracle.com. And don't forget as well, we got a couple of great webinars right under the services tab, the secret science of market tops, and then the 6 secret ratios every trader should know. Mr. Tim Ord, check those out under the services tab at TFNN.com. We'll be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. S&P's right now up by 33 points, just kind of hanging out almost a whole hour, right? Look at this low volatility we got, just chopping around near 59.80 since basically 2:30. You talk about low volatility, man. Let's put this back on a 1 minute. I can't remember the time we've had almost a whole hour. Look at this. You're talking about a 4-point range in the S&Ps, folks. A 4-point range in the S&Ps from 2:30 to where we were about a few minutes ago. We've ticked down a little bit, but yeah, you talk about no movement right now in this market. Since about 2:30 in the afternoon, VIX sitting at 1775, very little volatility premium, and gold backing off a bit. And, Tim makes some great points, folks, and that's where you don't got to be a huge bull in the short term on the gold contract when you've had this heck of a run, okay? And it doesn't mean you can't plow higher, but this has been a straight run higher from 1,900, call it 2,000, okay, to 3,500, 75% higher. And the only time that you consolidated was from September to January, okay, and that's when you consolidated in dollars. And folks, the only time you consolidated was when you had the dollar go from 100 to 110. You talk about some strength, man. Meanwhile, you go right back down to that, okay? As in, you had extreme dollar strength up to 110. You back it down. And then you're sitting at 99.29. Forgive me. So if that's your only consolidation, yeah, in gold, right? That's the only time gold consolidated was when the dollar went from 100 to 110. As in, that wasn't a consolidation. That was a straight acceleration higher in every currency except for the dollar. Remarkable strength to hold up the way it did when you had the dollar go from 100 to 110. And then that was the next leg higher when the dollar went from 110 to 100. Now you chop around, consolidate. Gold, negative by 21 bucks right now. We jump around some of the movers as we end. Dollar General up by 15%. And yeah, Constellation gives it all up to negative territory. That's quite a spike higher. Folks, thanks so much. Have a great night. Have a safe night. I'll see you tomorrow morning for the morning market kickoff at 9 a.m. Eastern time for the opening bell. Don't go away, folks.
Building